Good morning, friends. Today we will take a look at the second largest and most important software company. You know what? Infosys Limited. Infosys provides consulting, technology, outsourcing, and next gen digital services, primarily to enable its clients to execute strategies for their digital transformation. Now, it has two main divisions, you can say: digital services division and core services. Digital services contribute 57% of its revenue. Core services contribute 43% of revenue. Digital services provides uh, artificial intelligence based analytics, big data, engineer digital products, and IoT. IoT means Internet of Things. And modernize legacy tech systems, migrate to cloud applications, and implement advanced cyber security systems. Then the second one, core services, contribute 43% of revenue. It comprises traditional offerings including application management service, proprietary application development services, independent validation solutions, product engineering and management, infrastructure management services, tradition enterprise application implementation, and support and integration services. Apart from these project based services, Infosys also has product based services like Infosys Finacle product, Infosys McCamish, Panaya, Infosys Meridian, Helix, Equinox, Wingspan, Exerm, Stater, and a few others also. Now, what is the breakup of the revenue among the verticals? Financial is a vertical, 32%, that is the maximum. Retail services, 15%. Communication, telecom, and media, 13%. Energy, utility etc., 12%. Manufacturing, 11%. High-tech, 8%. Life sciences and healthcare, 7%. Others, 3%. Now, if you look at the breakup of the revenue across across geographies, North America contributes 62%, by far the maximum. So there is a lot of dependence on North America. If North America fails, our Infosys also fails. If North America succeeds, Infosys also succeeds gloriously. Europe 25%, rest of the world 10%, India 3%. Now, the size of the clients. The Infosys Limited caters to about 185 of the 500 Fortune 500 companies. There are 38 customers with more than 100 plus million US dollars, 64 customers with 50 plus million dollars each. Of course, in all these cases, the size is the criterion. 275 customers with 10 plus million US dollars. That is, project size is the one given. See, the biggest is 100 plus million, 100 million plus. 38 are there. Next is 50 plus million, 64 are there. 10 plus million, 275 are there. 1 plus million, 850 clients are there. That is measured in US dollars actually. Its clients include ICICI Bank, Daimler, Mercedes-Benz, HSBC Bank, Goldman Sachs, Johnson & Johnson, Accenture, US Army, US Navy, Lockheed Martin, IBM Corporation, Dash Bank and others. So the strength of Infosys and TCS both is their strong clients. Now we will come to employee base. There are about 3,15,000 employees. In FY22 itself, 1,40,000 employees have joined the company, out of which 80,000 were recruited straight from the colleges. But attrition rate is very, very high, 28%. Previous it was hardly 11% and its previous years was 17%, now 28%. Infosys has to look into the reasons for this attrition and plug the loopholes. Leading subsidiaries. Number of subsidiaries are there. We are talking of only two of them, which are the leading subsidiaries. Infosys BPM Limited. BPM means Business Process Management. It contributes to over 5.5% of the revenues. Then Verve Systems Limited. Verve Systems Limited contributes over 2.5% of the revenues. Now price graph, if you see, it is flat. You can say it is even trending lower many times. So that is the weakness from the viewpoint of investors. Now let us see the strengths and weaknesses, etc. Company has a good return on equity. ROE is very good at 27.2%. Dividend payout is very healthy at 54.3%. ROCE has been improving during the last 2 years. Net profit and net profit margin both are increasing quarter on quarter. Company has no debt. Increasing revenue during the last 4 quarters. Increasing profits every quarter during the last 2 quarters. Strong cash generating ability from core business. Improving cash flow from operations for the last 2 years. Annual net profits are improving. Zero promoter pledge. FIIs, FPIs or institutions are increasing their shareholdings. Now weaknesses are stock is trading at 8.7%, 7 times of its book value. Promoter holding is low at 15.2%. Negative breakdown compared to first support. LTP is less than S1. Declining net cash flow. Net cash flow is very good, but it is slightly declining. Now opportunities, if you look at that, brokers have upgraded their recommendation during the last 3 months. RSI is indicating the price trend. Price trend, it is not falling, but it is not going up. Now if you make a small comparison between TCS and Infosys, current market price of TCS is 3,381 vis-a-vis Infosys 1,531, almost half. Price earning likewise 30.43 TCS, 27 Infosys. Market cap 12 lakhs for TCS, 6 lakhs for Infosys. Quarterly revenue 10,883 crores for TCS, 6,586 crores for Infosys. Likewise, quarterly sales, what a net profit we have seen. Sales, net profits, almost everything is about half of the size of TCS. Now let us go to the actuals, revenue, profit, etc. Revenue from the latest quarter to the year ending, last year, same quarter, 32,389 crores during Q3, 31,567 during Q2, 27,337 during Q3 of last year. Expenditure 24,558 crores during Q3 of current year. 23,664 in the previous quarter Q2 and 19,930 crores in Q3 of last year. Revenue has increased year on year 18.48% and 2.6% quarter on quarter. Expenditure has increased more than proportionately 23.22% year on year, 3.78% quarter on quarter. Net profit 6,210 crores in the latest quarter Q3 and 6,253, slightly more in the previous quarter of Q2, 5,870 crores in Q3 of last year. So year on year there is an improvement of 5.79, but quarter on quarter there is a decrease of 0.69%. Equity currently is 2091. Equity has come down slightly year on year, 0.52% come down. Quarter on quarter also it has come down 0.62%. EPS, earnings per share, 14.77. And last quarter is 14.86 and year ago quarter 13.96. Operating profit margin presently is 27.94. Previous quarter was more, 29.18, and last year same quarter 30.92. So operating profit margin has come down by 9.64% year on year and come down by 4.25% quarter on quarter. Net profit margin also has come down by 10.7% year on year and come down by 3.23% quarter on quarter. So the performance is approximately equal to the last quarter, slightly lower than the last quarter actually, but reasonably high compared to year on year. 52-week high. Now let us see the price. 52-week high 1924. 52-week low is 1355. Now market cap is, as I said, 6,46,000 crores. It is almost half of the market cap of TCS. Face value is rupees 5. Price earning is 28.62. Now let us make a few comparisons about the price, etc. The current price is 19.83% away from 52-week high and 13.8% away from 52-week low. Momentum is not great. It is mid-range, let us say. It is an outperformer compared to Nifty 50, slightly. Stocks are 30 in number of large deals today, that is yesterday. 3-year CAGR growth, revenue has grown by 13.1%, net profit has grown by 12.8%, operating profit has grown by 16%. Now industry comparison, market cap, it is market's runner-up because number one is TCS. Trailing 12 months price earning ratio is slightly above the industry median. Price to book ratio is high, which is a negative point, which means price has to come down slightly or book value has to go up. Book value is not going up fast. Profit growth is below the industry median. Revenue growth is above the industry median. Operating profit margin has become negative this time. Now let us look at the shareholding pattern. Promoters have actually decreased their holdings slightly, of course. 15.16% last quarter, now 15.11 in December quarter. Mutual funds have increased their holding 17.59% to 17.7%. FIIs have increased their holding from 36.2 to 36.29. Institutional investors have increased their holdings from 68.58% to 69.05%. So, what is there for us in Infosys? Infosys is performing well in respect of its projects. It has built up a few good products, especially Infosys Finacle. There are other products also. But what I feel is Infosys, all of our software majors should try to build a good, wide selling products. Depending too much on projects is risky. Not only that, if you have products which are selling well, they are a constant source of revenue also. Like you see Microsoft, Windows, Oracle, etc. Every year there will be sales for that product. And in some cases the product numbers are very huge, like Windows, etc. Microsoft Windows, or all these things. Many, you see, Facebook is a product company. Now Google is a product company. Now that is how you have to build great products. In fact, at one time I remember Modi Saab was suggesting, why don't you have an Indian Google? Why don't you have an Indian Facebook, etc.? In a passing remark, he made it once at some forum. Now that holds good. See, you have to have great products. You have got great software strength means you must have great product also. You are bagging big projects from whom? From people who are building products. You get their projects, you build their products, and you give it to them, and they will sell their products. They become big and big and big. That product should show your world class. Thank you for listening. Anyway, Infosys is also moving fast. In some quarters, it is jumping ahead of even TCS. No, but overall, TCS is double the size of Infosys. But quarterly improvements, if you look at that, sometimes Infosys performs better than TCS. This quarter, TCS has performed better than Infosys. Thank you for listening. I'll be coming back to you with another very good company. Thank you.